So I'm peering out my window right now, looking up in the sky, and I think I just saw Nvidia stock fly by. What is going on, investors? Hopefully you guys are doing well out there. If you own Nvidia stock, you're probably having a great year. You probably had a great last 6 months. You've pretty much had a great time owning this stock for any length of time. And in the after hours, Nvidia just blowing the doors off of not only its stock, but also setting the stage for dozens and dozens of other stocks to follow on to this rally. And we're looking at a story unfolding right now in the technology space that is something that we just simply haven't seen probably since the creation of the internet and as the internet started to roll out. And that was a different time. That was a different place. There was far more unknown then, and there was far different circumstances that created the dot-com boom. We are on the precipice of the AI boom. This will ultimately be a, quote, bubble. This bubble will inflate, and it will inflate, and it'll continue to inflate. And Nvidia's results today show you that this bubble, while it probably will ultimately be looked back on as a bubble, is going to create generational type wealth for a lot of investors that get on the train and watch the bubble inflate. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Nvidia year to date. The stock's up 229% over the last year. Shares of the chip maker are up 167%, excuse me, 176%. We've got a forward price to earnings on this one at 55. That is going to look like an undervalued value stock after you look at the company's Q2 and more in particular, the Q3 guide, which just simply is going to have to re-rate everything that this company is going to have to report here very, very soon. We're doing editing. We're doing everything on the fly here at the Investor Channel. Let's jump over to the Q2 numbers. Revenue coming in at just $13.5 billion. Recall that Nvidia guided you 3 months ago. They said revenue was going to come in at $11 billion. When you come over here and look at these segment results, darn near their data center revenue almost came in at $11 billion. Even their gaming GPUs, which I tell you what, we're not going to spend a ton of time with here on the channel, still kind of sequential quarter-over-quarter growth, even year-over-year growth on those. And you peruse YouTube, and it's just gamers kind of talking down the price of the GPUs versus the performance. Well, they're having no problem selling those. Their other business lines, while we're seeing pretty strong sequential growth year over year, relatively flat or down, it gave us a grand total of $13.5 billion worth of revenue, which if you compare to last year or even last quarter has just gone absolutely parabolic. Now, what's also gone absolutely parabolic is the fact that revenue is expected to be at $16 billion. That is right, $16 billion in the most recent quarter. So folks, here's our quarter over quarter trend for Nvidia. We went from 6 billion to 7 billion to 13 billion, and now we're about to go to $16 billion. But again, I want you to keep in mind, this company guided for $11 billion in revenue, and they put up 13.5. My hunch is this 16 billion for the upcoming Q3. This is 18, 19, maybe upwards of $20 billion by the time you get to that Q3. Now, this $16 billion number is a surprise to Wall Street, which was at an estimate closer to $12.4 billion before this announcement, which is one of the reasons why Nvidia stock in the after hours is continuing to move higher after a very, very good day. I said I was expecting numbers much closer to $14 billion. So I was $1.5 billion over where Wall Street estimates were for Nvidia. Again, I sent this tweet out before today. And no, Nvidia making everybody look stupid, coming in at $16 billion. What's going to have to happen with Nvidia shares? Well, again, they're being re-rated with the price, which we'll talk about here in a second in the after hours. The stock is going to have to get re-rated higher again, folks. $16 billion is well north of $1 billion higher than the high-end estimate, which we're trending up, okay? It's not like Wall Street is completely behind the curve with Nvidia, they have been trending their revenue estimates and earning estimates up with Nvidia for the past several quarters, including over the last 6 months, raising their estimates by 58%. They just have not gotten them even higher. So now we know Nvidia is guiding for $16 billion. Chances are the company is probably going to do a number closer to 17, 18. If everything goes well, you don't get a ban in China, you might do 19, $20 billion in revenue for the Q3. Well, that means Q4, you're probably going to do a heck of a lot more than 13 and a half. You're going to do way more than 14. None of the, I don't think for the next probably 8 quarters, nothing on the Wall Street estimate is correct. So you're going to have a complete re-rating of this stock. You're going to have to re-rate all these EPS estimates. So all the people out there that are going to be like, Nvidia's overvalued. And I think at one time, shares of Nvidia were absolutely overvalued. When you go back and look at this company's revenue history, when they were putting up $6 billion, $6 billion in revenue, and nobody knew at that time this type of revenue growth was coming. Well, absolutely. Shares of the company were overvalued from a traditional sense, but right now, the stock trading at whatever the price to earnings multiple you want to put on it is actually probably not high enough. When you have this type of revenue growth, and I'm going to show you here in a second, look at these gross margins, 70%. This is going to sound like I'm in love here, but I mean, I'm practically am with these results. 70% gross margins for Nvidia in the most recent quarter. Last year, they were sitting at 65%, last quarter. So just over the last quarter, we've raised our margins by over 5.5 points. And then from last year, you were sitting at 43.5%. This is something you can't predict, and you almost never see this in the stock market. This is truly remarkable. I have done obviously hundreds of these earnings videos. I've reviewed thousands of these at a time. I'm trying to go back in my head when I saw this type of explosion when it came to revenue growth and surprising to the upside. It happened during COVID, but there was a lot of reasons for that when it came to government stimulus. This is happening largely because the customers of Nvidia have been making billions and billions and billions of dollars over the past decade, with Google and Microsoft and Meta being some of the largest customers of this company. They just continue to unload those billions of dollars into now the pockets of Nvidia. Folks, revenue over the last year went from 6.7 billion up to 13.5. Folks, that's not the most impressive thing on this chart. Look at this. Cost of revenue went from 3.8 billion up just a little bit to $4 billion. Your gross profit went from 3 billion up to $9.5 billion. You barely spent anything on R&D compared to last year. Your total operating expenses barely nudged up. Again, I want to remind you, this company just put up 101% revenue growth. And when you look at these financials, the cost of revenue didn't move. The research and development costs didn't move. Selling, general, administrative, so these things are basically selling themselves more or less. And so you had operating income go from essentially break even. This company actually was a break even company. So you went from 500 million all the way up to $6.8 billion. This company was just marginally profitable this time last year. Now we printed $6.2 billion worth of profit in a quarter. And guess what, folks? Guess what? The next quarter is going to be even better. And the next quarter after that is probably going to be better. At some point, the revenue growth slows down from 100% as you start to lap these types of results this time next year. But Nvidia has basically just re-rated its stock to a much, much higher level from a net income. And then when we come down here to like a cash flow perspective, it's re-rating itself to obviously a much higher level. They've right-sized their inventory over over the past year. They've increased their prepaid expenses. That's actually, in this case, a very good sign. The fact that they went from $800 million in prepaid expense all the way up to $1.4 billion. They're having to, prepay suppliers, prepay TSMC, prepay to build and fill this type of inventory. It's just insane. Long-term debts. No one's really concerned about that at this point. Come down here to cash flows. Everything from net income basically flows all the way down to operating cash flows. They don't really do a whole lot on the investing side. You are now buying back the stock. So that is what Nvidia is choosing to do with a lot of this excess cash. They are also paying back debt as well, which will make the financials look a little bit better, although 100% revenue growth solves a lot of those questions. The company announced a new $25 billion buyback. So that's where a large percentage of the positive cash flow that the company will generate over the next 12 to 24 months. A lot of that is going to go to that beautiful share buyback. And again, I want to highlight that this company announced $11 billion worth of total revenue for all of their business. That was the guidance for the Q2 that we got, I believe, maybe back in April from this company. And they put that up nearly in the data center. Again, these are your AI chips. So when the company says that they're going to do $16 billion in the most upcoming quarter, forgive me to think that this is definitely a case of sandbagging, and that Nvidia is probably going to come to a number much closer to potentially $20 billion for the upcoming quarter. And I showed you at these gross margins and similar operating expenses, this is a company that, yes, is a well north at this point, a $1 trillion company, but finally now has the financials to back it up. Now, what's also not backing up is the stock price of Nvidia. We have re-rated higher with the shares in the after hours, up over 8%. I am recording this, I believe, before Jensen Huang gets on the conference call and starts to sing sweet music to the analysts, which I'm sure will have to pick their jaws off the ground based on the results and the guidance that Nvidia has given. Jensen Huang, obviously not a man that is shy about hyping and pumping what he is doing. This, in my opinion, is more or less the culmination of his career. He is more than likely going to take a victory lap and more than likely going to continue to pump the stock in the after hours. Again, this is shares of the company obviously are up 1,000,000% over the last year, but during the regular trade, we're up 3%. And now in the after hours, up another 8%. When we move around the different chip makers that are out there, AMD also up 3.5% during the regular trade, up over 3% in the after hours. When you look at a company like Broadcom, up 2.5% during the regular trade, another nearly 3% in the after hours. And then finally, when you get over here to Intel, fortunately not catching the bid. And, I've beaten on Intel quite a bit on this channel. Companies more or less waiting for PC demand to come back, and similar to AMD as well. But all eyes on Nvidia is in the after hours. Shares of the company up now north of $510 per share. We're pushing to a brand new 52-week high if the shares are able to hold that level and close there after tomorrow. I would argue that the forward revenue estimates on this company are going to have to come in way hotter than is anticipated. So when you come to sites like Seeking Alpha and sites like Yahoo Finance, and they say you have a forward price to earnings on this one at 55, I would guess you could probably come close to cutting that in half. This is a stock, believe it or not, that is actually probably trading much closer to a market multiple, believe it or not, on not only its sales, but its earnings as well. This is going to have a ripple effect among many other tech stocks as well, as you see shares of Microsoft and likely Google as well moving higher in the after hours as Nvidia's chips. Here's the thing that you guys need to understand. If you've missed the train with Nvidia, don't worry. Don't be concerned. Don't feel like you need to even come in here and chase Nvidia if you don't want to. Every product that Nvidia sells is going to create another product and help fuel another software service product, fuel some other hardware product, fuel some other cloud service provider. There is going to be billions, likely trillions of dollars that is going to be made off the back of Nvidia's explosive earnings. These chips take a while to manufacture. On top of that, once you get them delivered, you have to install them on a server and network them and get the software all loaded up. Then you have to train your language model and get that all suited out. These things take months and months and months. We are likely still 12 months away from realizing the sales and the revenue that Nvidia is going to create for other software and other providers as well. I provide a lot of this research to paid people, so I better slow down in terms of my recommendation. But if you read between the lines, folks, this is not the end. This is not even the beginnings of a bubble. We're talking about the beginnings of a multi-year trend. When you see results like this, which you never ever see this in the stock market, trillion-dollar companies constantly being re-rated after earnings, it means a whole flood of software products are coming and coming very, very soon. Hopefully you guys enjoyed today's video. We'll be back again with more on Friday. Until then, good luck with your investments.